Hello and welcome to the Cross Border Capital podcast. Today I have a very special guest with me, Miss Renu, who's a tax specialist. And as we are in the middle of the tax filing season, I thought it would be quite helpful for my NRI friends and associates to get some understanding around what are the tax implications for NRIs specifically. Now, today in this podcast, we are going to cover 7 questions and reveal the 10 biggest NRI tax mistakes that basically can cost people lakhs of rupees. So, without much further ado, I'd like to invite Miss Renu. Hello, Renu ji, and welcome to the Cross Border Capital podcast. I'm really, really happy to have you as my guest today.
Thank you so much, Sonia ji.
So, just to put it a little bit in context, Renu ji and I met recently, and Renu gave a talk on tax filings for Indians, like for resident Indians, and I really liked the fact that Renu broke them down in very plain and simple spoken English. Because, NRI specifically, if they go on the net, there's so much information there, but at the end of it, you've spent 2 hours researching what the right information is, and people generally come back more confused than clear before searching the web. But that's my personal experience as somebody who's lived abroad and moved back to India. I've gone through all of these challenges myself, despite being qualified as a chartered accountant. So, Renuji, welcome aboard. Today, our objective is to demystify Indian taxation and tax filing for NRIs.
Yes.
So, as we were talking, thousands of NRIs pay unnecessarily taxes every year, and that's not because tax laws are complicated in India or anything like that, but because they make certain assumptions. So, today I want us to break down for them what are the biggest misconceptions that NRIs have about Indian taxes. Let's start with that.
Yeah. Thank you so much, Sonia ji, for my introduction. Thank you so much. And the question about the misconception, I think the biggest misconception is that once a person becomes an NRI, no, they think they don't have to pay the tax in the India. That is very incorrect. Your NRI status does not mean all your income become tax free in India. If you're earning from the India, like the rent income, especially property from your property, the capital gains income from the selling property, can say the shares, and these all are the taxable. So either you can say the business income, then you have to pay the tax still in this case. So this is the biggest misconception here, and the income is still taxable in India. So becoming an NRI, changes does not changes the what the income is taxable, but it also it does not remove the tax liability as from the Indian's perspective. So that is why I would like to say ki don't assume that your tax position is not like liable to pay the tax in India. So this is the biggest misconception.
Yes, and it's a very important one because people think if they've spent 2, 3 years in UAE or in UK and that they're already filing tax returns in UK or US or wherever, they assume that now that we are earning income here, we don't have any obligation to file taxes in India. So it becomes it's a big risk also because if they're getting rental incomes or anything like that and they're not disclosing and not filing ITR, that would have implications. So that is, as you just rightly mentioned, that is the first biggest mistake that people tend to make. Renuji, the next question is, does becoming an NRI automatically mean no tax in India? You've almost answered that, but uh, yeah, let's break that down a
Yeah,
little
got
bit
it.
more.
Yeah. Actually, no, I think not at all as you are asking the question, because many people think that the moment they move abroad, they think so, they don't have to file the income tax return in India. But that is not like the how the law works, right? I'm talking about the income tax law. And India taxes NRIs only on the income that is earned or received in India. This is the main fact of either can say that, for example, as we talked above in the first question, like if you are, for example, if you are working in Dubai and your salary is received there, and generally that salary is not taxable in India. Okay, but if you own if you own a house in India and you are earning the rent from that house, or for example you sell that house, in the India, so you have to pay the taxes on that things. So either you can say the, if you are earning the business income in India, that income is still taxable. So I can say ki every NRI should first check the source of income, and there is a matter of the source of income, uh, before deciding whether tax is applicable or not in the India.
Yeah.
So the main factor I would like to say, the source of income really matters here.
Yes, I remember from my studying days, one thumb rule about income tax that I never forget is that income is always taxed at the source. So
Yes,
whichever country the source is, that's where the tax liability arises. And after that, there's DTA, double taxation avoidance, and all
yes,
of those. Those are next level topics. But always remember this thumb rule that the incidence of tax is always in the land of where the income is generated.
yes,
Great.
definitely.
Thank you,
Thank
Renuji.
you.
The third question is what income is still taxable in India? You have somewhat answered that question, but let's break it down because there are so many hidden places where we are earning income, but they just get hidden in plain sight.
Yes, and and it brings a more clarity as
Yeah.
we, as the listener will listen this thing, and they get very much clear on the things. Like as you asked the question, what income is still taxable in India? As can say that there are the many types of income that can still be taxable in India. As we are talking, especially the rental income from the property in India is taxable. If you sell the property, shares or mutual funds can say the profit can say the capital gain may also be taxable. If you are running the business or providing the professional services in India, it also be taxable. Or can say the salary for services you performed in India, it also be taxable. Some interest you are earning, in the India from, as you are holding the bank account, right? So it also be taxable. It depending upon the type of account. So the simple rule I would like to add in this that ki, if the income has its source in India, same thing. So you should check definitely whether tax is applicable or not.
Yes. Renuji, I think it's simple that if they're getting rental income, it's very easy that I'm getting income, I will file tax in India. Even capital gains, selling and TDS is there. So, that is easy to catch. I think there are hidden places which are more important to highlight here are say things like if you're depositing in a mutual fund in India, for example, you know, let's break down that mutual fund. As long as you're investing and it's gaining in value, the tax liability doesn't arise in that year, right? It would when you're selling or when you're actually creating a gain or loss in that. Similarly, interest on FDs. So would you like to break
It
that
is,
down?
yeah, it is. First of all, I would like to say these things as you're asking this question. We always suggest to our client, don't deposit your money in the saving account or can say the FD and term deposit, because you are getting the interest every year, and that interest is becoming the part of total income. And secondly, to ask the question about the mutual funds, we always suggest our client to invest in your shares, mutual funds. At least you are just accumulating the all the profit, and when you sell these things, this will turn into the long term things. So there will you will get the benefit also. So it is a huge difference in between the FD interest that is the taxable every year, and it become that total part of your income. But when you invest in your shares, it become a very great beneficial to the shareholder, like the taxpayer. It does not include in your salary, because the moment when you sell these shares, the mutual funds, when you sell, so only the profit part you will get the some also the benefit when it is the long term, right? And after that the remaining profit you will, it will be taxable, but at a very less amount, only if it is a long term you hold. So this is the main thing we always suggest to our clients. And the main thing, as we are as discussing, the only misconception in the NRIs think, they think the moment when they arrived in the abroad, they think they don't have to pay the taxes. As we are discussing these three questions,
Yeah.
so these are the main things. You cannot escape from filing the ITR in India.
That's a very important and key message in this podcast. So, moving on to the
Yes.
next question, what mistakes do you see most often when you deal with NRI clients?
Yeah, actually, I see the common mistakes is that the people don't calculate their status in the sense of residential status I'm talking about. And residential status is decided mainly by the number of days that you are staying in India during a financial year. Okay. For example, can say that for most people, if they stay in India 182 days or more during the financial year, they become a resident subject to the certain conditions. Similarly, if they are not living in India 182 days or more, so they become the NRI, non-resident individuals. So can say that subject to certain conditions under the Income Tax Act. And there are also the other rules we heard about that the 60 days rule, 365-day conditions, and it depends on the person's situation. So before filing the ITR, residential status should always be checked, especially for the NRIs, because the tax rules are different for the residents and the NRI. And the second mistake we are just talking is, for the bank accounts. I'm saying like this because most of the people continue using a normal resident saving account even after becoming the NRI. It is a very true thing.
Mm.
And as per the FAMA regulations, resident accounts should generally be converted into the either the NRO account or NRE account. And I would like to tell you the NRE simple basic difference that NRE account is mainly used to keep the money you earn outside India. And the money in this account is freely, transferable. And the interest is generally free, tax free in India. I'm talking about the NRE account. And about the NRO account is mainly used for the income earned in India, like rent, pension, can say the dividend, right? And the interest on NRO account is generally taxable. So these are the things. And the next mistake I would like to tell is not filing the income tax return, even when it is a required. And the main thing is also main mistake is also not reporting the capital gains correctly after selling the property of in the India. So most of the I would like to also tell most of these mistakes are simply avoidable. So if proper advice is taken or if they listen and if they read all these things correctly, so these are the mistakes are avoidable.
Beautiful, Renuji. I'm glad we had this conversation because till now I wasn't sure NRE, NRO, what are the differences and what are the benefits. So people who have gained the NRI status, I may say, and if they're still maintaining normal domestic savings account, then they're missing out on the tax benefit that they can get on the interest that they're earning on their savings. By simply transferring them into NRE, they can save that tax liability on their interest, right? Is that yeah?
Right. Thank you.
Great.
Thank you.
Thank you. Thank you so much for that clarity. Now, one more question is, can one wrong decision trigger years of tax problems for somebody? Say, for example, somebody misses 1 year's tax return because they hadn't watched this podcast, let's say, for
Yeah.
example. So, what are the implications of not of one mistake, like not filing your tax return in 1 year?
Okay. I'm not filing. Okay. The question is, I did not get the
Okay.
question.
The question is that somebody becomes an NRI. Somebody's moved to
Okay.
Dubai on a 2 year project, right? So, or a 5 year project. So, in the second year, they've gained the NRI status as per tax calculation. They've stayed more than 182 days abroad and they can, under Section 6, they can file as an NRI. But because
Okay.
they did not understand that just by moving abroad doesn't mean that they don't have to file an Indian tax return. They still have savings accounts, they have interest earned on their savings accounts, they have mutual funds. So they were normal Indians before they moved. So they have all these accounts in India, but now they did not know that now that they're abroad, that they had to file an Indian tax return. Now, if they miss filing for 1 year, what are the tax implications?
Yeah, it is a can say that you did not file your ITR, right?
Yeah.
If even you have your income, all these things. For example, I can tell you, see, I would like to tell a very simple statement like a one small mistakes can create the problems for many years. For example, as we are discussing that he shifted to the NRI and he is having the bank account interest, rental income.
Hmm.
So what it means that you are not filing the income tax return. It means you are hiding your income because in the portal, in your income tax portal, Form 26 AS and Form AIS showing all your income, like the rental income. For example, if you sell your property, right? If you sell your property and you don't know about the tax implication, you did not deduct the 1% of TDS. So in that case, these all are the tax implication, and you have to file the ITR. These all are things. And similarly, as we are saying, we shifted to the abroad, and we have the bank account interest, we have the capital gains, and we did not show in our ITR because we did not file the ITR. We skipped the ITR. So definitely we are calculated as a default person. And after some time, we get the chance to file the ITR, but as a belated return, you can file your ITR, but with the penalty you have to file when you get the notice, because department sending the notices very randomly. If you're eligible to file ITR and you are not filing the ITR, in that case you will file the ITR after due date, and but with subject to some penalty. And this is the government also told, like you can file your 3 to 4 years earlier returns also, but with subject to the penalty.
Wow. Okay. So, very important information there for anybody who's living abroad and is still an Indian citizen. So, if they are under the NRI status, then it's very important to file your return every year.
Yes,
Okay.
they have
Moving
to
on.
check. Yes.
Yes. Yes. Yes. Thank you so much. Now, next
Thank you.
question is, what records should every NRI maintain?
It is very simple that as we are just talking in a very simple terms, I would also like to tell. This is a very important and good question. Thank you so much. And for the NRI, the all the documents they should organize. First is the keep the about your passport. Keep your passport safely because your travel dates helping the determine their actual residential status. Right. Secondly, maintain all your bank statements, Form 26 AS, TDS certificates, and the statements, and properly about the property documents you should keep safely. And yes, if you have the rental income, because we are discussing from the initial questions, rental income, property documents, and all. If you have the rental income, so keep your rent agreement, rent receipts properly. And if you paid the tax outside India, keep those tax documents as well, because it may also help you to claim relief under the DTAA. It is a double taxation avoidance agreement. So these all are the basic documentation. And yes, when you keep all these documentation in good manner, so it will also give you the easier tax filing, and also helps if department asks any question in future.
And double
Yes.
taxation avoidance agreement works both ways, right? So if they paid their
Right.
Indian income taxes in India, because in most Western countries you have to disclose your global income. So if you're filing a
Right.
tax there and you're disclosing all your Indian income, you can also show the certificates of DTAA, and also you don't have to pay taxes in both the countries.
Yeah,
Thank you.
in very short, that
Yeah.
is a very detailed topic, as
Yeah.
you just initially you said this we will discuss in later. But yes, in initial terms you are definitely you said correctly. And also the thing is ki the government is just want that no taxpayer have to pay tax double times.
Yeah.
So it comes with this motive, double taxation avoidance
Yeah.
agreement.
Yes, I think that's the whole point of doing this podcast, Energy, is that we should demystify it because, we take years and years in understanding the language of the law, of the acts and
Yes.
everything. But everybody can't go straight into the act and understand what has taken us years and years and years of learning and
Yeah.
applying. So,
Yeah.
so it's important to speak in the language that our viewers can understand.
Yeah,
So,
it is
fine.
very simple to understand, but the main thing is like you have to do the all the things, but once you get the basic knowledge, So you will find everything easy and in a very systematic manner. We should do all this documentation, the misconception we should understand as an NRI, especially.
Yes, I always tell my clients that you can always delegate tasks, to the experts. But even with delegation, at least you must have your basic understanding of what you're doing and why you need to do that. So that
Yes,
level of awareness is very, very important, because otherwise
very
important.
important.
Yeah. So final
Yes.
question for this podcast is, what's the one thing every NRI should review this month, especially now in this month of July that we're in? What would you
Yeah.
say?
So as yes, as you said, it's a July month, so it's a tax filing season. So every NRI should spend just minimum 30 minutes to just review their Indian income income just in a very good manner, in the sense like check whether all your income has been reported correctly, because that was when saying, because they have to verify their Form 26 AS and AIS. And I just would like to tell about the AIS. It is the annual information statement. It is already available on the income tax portal. When you log in, you will find the Form 26 AS. In the Form 20, in the Form AIS, you will get the all the income. That we are talking about the rental income, interest, FD interest, term deposits interest, mutual fund, shares income. So you have to check all these things, right, in this tax filing season. And also in the Form 26 AS, 26 AS is the tax TDS statement, like where your TDS is deducted. Suppose, for example, if you are getting the rental income, right, and you are getting the rental income after deducting the TDS. So the amount of the TDS, it will show in the Form 26 AS. So you have to check whether the TDS, showing in the TDS statement means Form 26 AS is showing correctly or not. We have to check and confirm. Also, the main important thing is all about the residential status has been determined properly or not. And one of the last thing I would like to tell, and sorry to suggest, don't wait the last day to file your ITR. The
Yes.
simple, yes, just file your ITR whenever you prepare with all your documentation. And this, all the simple review now can avoid the, notices, penalties, unnecessary stress in the future.
Yes. And final question, Renuji, the tax filing deadlines are the same for NRIs as it is for residents, or are there different dates or anything?
No, no, it is same for everyone. Yes.
Okay, so 31st July is for people who are filing under what status, and what is the deadline for, like, what are the
Yeah.
two deadline dates? Can you please clarify that?
Yeah, 31st July is simple for the ITR 1 and ITR 4, which is a simple return. ITR 1 is especially for the salaried person, and ITR 4 also for the businessman, but it also depends upon the presumptive income. If you're a businessman and taking the presumptive basis, so these are the ITR 1 and ITR 4 are the very simple returns. But in the case you have the mutual fund shares, capital gain income, so these all are covered in the ITR 2 and ITR 3, and they are the little complicated. So government give one extra month. So these ITR 2 and ITR 3 due date is the 31st of July. Sorry, 31st of August, and ITR 1 and ITR 4, 31st July.
Okay, great. Thank you so much, Renuji. You've demystified so much for people who spend hours and hours trying to understand what they have to do. Probably they can just now grasp it all in this short podcast that we have just done. I would like to continue
Thank
our
you so much.
discussions further if that's okay with you, because I want to really go after like people who are not like NRIs, but they are PIOs, people who have foreign passports. They're probably born and brought up abroad, but they have Indian origin, in the sense that their parents were Indians. They have ancestral property that they have inherited, which is now in their name, and they're probably earning rental income, but they have no clue as to how this whole system works in terms of Indian laws and all that. So in our next podcast, which we will do ever so often, let's talk a bit more around those categories of people in our cross border capital podcast. I Yeah, I would love for you to give your views on how they can manage their Indian incomes and tax obligations. Is there anything
Definitely, definitely, I will be there. And in last, I would like to tell to give a simple message to all the NRIs. Is very simple that most tax problems don't happen because the because as we are saying, income tax law is not difficult. It is very easy. It's only depends like how we understand this, and how you follow the person who really making it very simple way. So just try to follow those person who making it very simple, because it is very simple. It is all about the basic knowledge that you should have. And
Yes,
we and as you try to just with this podcast to give all these things in a very simple terms, it is very beautiful.
great. Thank you so much, Renuji, for your precious time, and I'll see you in the next one. Yeah.
Thank you so much. Thank you.
Okay. Thanks for now. Bye now.